Welcome everyone to this GIS update on the energy markets after the beginning of the conflict in Iran. My name is Andy Kureth. I'm managing editor at GIS, and I'm here today with Carol Nakhle. She is a GIS energy sector expert and the CEO of Crystal Energy and Energy Advisory in London. Carol, thank you so much for being with us today.
Great to see you again, Andy.
Carol, let's get right into it. So we have this huge conflict that is going on in Iran and now around the Middle East. That started a couple of days ago, and it's expanding, and it has had a huge effect on energy markets. What does the situation look like right now?
Not a nice situation at all. I mean, really, this is one of the worst scenarios that energy analysts have envisaged for the region. Throughout the year, you always talk about if there is a conflict in the Middle East, what does that mean for energy prices, particularly oil and gas prices? And as a result, what does that mean for global economies? And that scenario is happening. It's not yet the worst, like worst of the worst scenarios, but it's definitely not a good scenario because we're talking about perhaps the most important region for oil and gas exports. And it's not anymore limited to some targeted attacks or a couple of, bombs exploding here and there. It kind of has expanded beyond, let's say, Iran and Israel, as we saw over the last 2 years, or it expanded beyond the Americans just attacking the nuclear facility in Iran. It's a very evolved situation compared to what we saw over the last few years. And not only because of what's happening in Iran, that is quite big, what is happening in Iran, but also the Iranian retaliation, which has impacted two important aspects that are very relevant to global oil and gas trade. One, the trade itself, because you're talking about the Strait of Hormuz, over which Iran has a major oversight. And they have threatened that they were going to set on fire any ship that goes through that strait. And typically, on a normal day, you would see around 20% of global oil traded goes through that strait, and around 20% of global LNG goes through that strait. So, in terms of trade, it is a very important region. But also, the second development that is also impacting prices is the direct attack on energy infrastructure. And we have seen this in several countries in the region. We have seen this in Saudi Arabia. We have seen this in Qatar. We have seen this probably in the UAE as well. And that is a more worrying aspect than just blocking the Strait of Hormuz temporarily. But I want to add also for the Strait of Hormuz, one of the consequences that we are seeing is that not only the trade is blocked, but we saw, for example, with Iraq, they were forced to shut production from one of their major fields, the Rumaila field, because they have run out of storage capacity. They have filled all the available storage because they cannot get that oil out of the country to the rest of the world, and therefore they are filling existing storage. And when you hit that maximum capacity, you have no other choice but to shut down the field. So this is a kind, if you want, of the similar dimensions, the consequences of the conflict on energy trade, energy infrastructure, energy production, and it is filtering through the global supply chain, but primarily they are translating into much higher oil and gas prices.
Yeah, that was going to be my next question is what does this mean for prices? And of course, I can look at my local gas station and see that prices are going up. And of course, anybody following the news knows that the oil prices are going up. How are oil markets adjusting, and how long do you think that this situation will last? I mean, obviously for as long as the conflict lasts, but will there be a trailing effect? Will this take longer? How much longer will it take to be getting that production online? How are the oil suppliers adjusting? I know that OPEC has agreed to increase production, right? But some of that must, of course, be hampered with the facilities that have been damaged. So what does the situation look like now when it comes to oil supply? And also if you could touch on, of course, how countries like Saudi Arabia can get oil out of the country when they can't get it out of the Strait of Hormuz. And also, I know that a lot of shipments through the Red Sea are being avoided now because of increased violence from the Houthis?
Let me kind of focus on all these important dimensions that you highlighted. And I'm going to start, first of all, with oil prices. I know many might be saying, oh, the market is still not factoring in or taking consideration properly the risk, the geopolitical risk and the impact of what's happening in the region on global prices. First of all, I don't think the market is underestimating the severity of the situation, but we have to take into consideration the global prevailing market conditions before the crisis happened. So as of at the beginning of this year, everybody was expecting a surplus in the market, and that's why oil prices were really trading in the 60s or in the low 70s. But then, as soon as we heard of the military buildup, the American military buildup in the Middle East, I think, which was the biggest since perhaps the war in Iraq, we started to see oil prices gradually increasing, which means the market was already factoring in the potential escalation, because you wouldn't achieve all this build-up military power, military presence, unless you are considering seriously the next step in military action. And that happened. So we did see prices increasing. I can say we saw spikes, so compared to the prices we have seen before, but we are still in a relatively reasonable situation, because we did not see the spike, for example, that we saw in 2022 when Russia invaded Ukraine. We did not see the jump to $130 in a matter of days and weeks. So the reaction of prices is there. It's not maybe as severe as people have expected or feared, but it's not because the market is ignoring the risk. It's simply because there is plenty of oil still around the world, and not necessarily concentrated within OPEC plus. You have the strongest supply growth we have seen in the last few years has been coming from outside OPEC plus, from the US, from Norway, from Canada, from Guyana, from Brazil. That oil is still there, has not been affected. There's ironically still the sanctioned oil from Russia and partially from Venezuela still out there, and most of it is not really properly accounted for. But in addition to the supply side, I'm also thinking about the demand side. Demand was not booming at very high rate, and that's why we were supposed to have a surplus this year. And when we have such high prices increasing, that is going to also moderate further the growth in oil demand. Add to that the safety cushions in the system. We always said that we have the safety cushions from OPEC plus, but how to get that to the market is questionable today, and I'll come back to that in a minute. But you do also have shale in the US, even if it does not compensate fully for a total loss of supplies from the Middle East, still higher prices can encourage further investment and further activity. And usually we see much faster response from shale than elsewhere. And then add to that the strategic petroleum reserves that some countries under the leadership of the IEA as the agency that coordinate the release of those strategic petroleum reserves. We also have those, and we have not really put them in the market. So when you look at all these moving variables at the same time, then you will understand why we are at the levels, we are seeing the levels that we are still seeing today, and we have not jumped into, say, the three-digit territories. That said, it does not mean that we cannot see further increase in prices. I am most concerned about the attacks on energy infrastructure in the Middle East, because at the moment, you might have a partial alternative to redirecting some of the oil from the Strait of Hormuz to other export routes that the countries in the region have been investing in because of that vulnerability that is the Strait of Hormuz. But if the attacks on the energy infrastructure continues, that may take away perhaps that optionality. But worse still, it might drag the countries in the region into the war, because at the moment they have been taking a situation of protecting themselves from the attacks, but it's a question of time. If those attacks continue and intensify, I think it's a matter of time before countries such as Saudi Arabia and the UAE and maybe Qatar take a more aggressive stance and become dragged into this war. So this is, for me, the really worst case scenario that can affect more notably the supply, the availability of supply, and the trade of not only oil, by the way, but also of gas.
I was just going to ask about the differentiation between oil and gas, but before I get to it, I just wanted to tighten down one point that you made. about these countries getting dragged into the war. So the worry is that as they get dragged into the war, they'll become further targets and their production facilities will become further targets. Do I understand that correctly?
Correct. And also there is to an escalation of a war that may not lead and might not go to end anytime soon. And the longer that conflict goes on, the worse the situation becomes for a global oil and gas trade. That said, I am a little bit optimistic that it's not going to be, for example, because of the realities of the markets today, they are much better shielded than they were perhaps 20, 30 years ago, and less exposed to what's happening in the Middle East. I don't envisage, let's say, a lasting crisis. Of course, I'm not diminishing the impact of what's going on in the Middle East on global energy trade and prices, but I'm not envisaging yet a scenario whereby, even under the worst case scenario, whereby we're going to see a multi-year energy crisis as we saw, for example, in the 70s and the 80s, because markets have evolved significantly since then.
Perfect. That clears it up. Now, if you could just very quickly talk about the difference in effect, if any, on oil and on gas and how that plays out in the context of the current conflict.
The difference is quite big because we have a fundamental difference that oil markets are global, gas markets are still regional. But within gas markets, we have LNG, the liquefied natural gas. It has helped to globalize gas markets, but they are not yet as established as oil. And that's why we tend to see, for example, the impact of a crisis such as what's happening in the Middle East more visible in terms of the global prices for oil everywhere you would feel it. With gas, you would see, for example, the impact on the gas that is traded on the spot market. So that is a proportion of gas where we immediately see the reaction in terms of higher prices. But there is also another important chunk of gas that has been purchased a while ago under long-term contracts under a certain specific pricing formula and this is where the impact of the crisis is not necessarily immediately felt on prices, or it would be a very moderate impact because depending on the kind of agreement that you had in those contracts, which are, for example, for 20 or 25 years. And that's why we have the difference. That said, the fact that we had a major gas exporter, that is Qatar, shutting down its facilities, that is by itself was an unanticipated event. And as a result, we saw an upward pressure on spot traded gas prices, particularly, for example, in regions such as Europe, we did see a major spike. But there is an alternative to Qatari gas, not sufficient to fill the gap, particularly in Europe, because you do have energy from the US is traded on the spot market, and therefore it can fill the gap if that occurs. But I would say Asia might be more exposed than Europe to what's happening at the moment with LNG when it comes to, at the moment with Iran, but also what's happening in Qatar is shutting down the LNG facility.
Okay. That gives us a very clear picture, and for our listeners and our viewers, what to watch out for over the coming weeks. Carol, I want to thank you so much for joining us today on this GIS update, for your insight, and of course, your many years of analysis can be found at gisreportsonline.com. Carol, thanks so much for joining us.
Thanks, Andy.
And thanks to our viewers. Please log into the GIS website again at gisreportsonline.com. And we'll see you soon. Goodbye. Okay.